Well, the government, along with American banks, have long promoted the idea that the bailout saved the U.S. from financial apocalypse. Don't you feel saved? Our next guest says that simply is not true. In fact, you don't have to believe him. It's a mathematical fact if you look at the trillions of dollars in lost lending to our country while we give them $30 trillion. It's a math problem. It's not an opinion problem. Our next guest's newest book, he argues that the regulators misrepresented the truth about the mortgage and banking crisis in order to validate overzealous federal action. That is one way to look at it. 3 years later, unemployment is still a disaster. Housing market still a disaster. And we keep printing money. And those are all just symptoms, by the way, of the fact that we do not have a culture of investment in our country because we do not have a functioning banking system to do it. Vern McKinley, research fellow at the Independent Institute, author of Financing Failure, A Century of Bailouts. In a nutshell, Vern, why bother managing risk and investing it in a traditional financial construct when you have legalized risk exporting and distribution to other people?
Good afternoon, Dylan. Thanks for the invitation for the show. I don't think we have a system where risk is allocated in a proper method. The big banks and the other banks are in two different universes. The big banks have the support of the government, whether they're the commercial banks or Fannie and Freddie or otherwise, and the small banks are in a different universe where they have to pay for their failure. The big banks don't have to pay for their failure because they just get bailed out.
Guy, go ahead.
Vern, I saw that you have been kind of raising the clarion call about Fannie and Freddie years before those two organizations were major players in the housing bubble bursting and then the whole thing almost going down. And then Dodd-Frank, the supposed solution to all of this, totally ignored Fannie and Freddie. What would be your prescription here to rectify that situation for those two GSEs?
Well, I would certainly start to wind down Fannie Mae and Freddie Mac. They haven't been downsized at all since September 2008 when they were put in conservatorship. And if you compare it to other similar conservatorships the government has had control of, like the Resolution Trust Corporation in the 80s and 90s, they immediately started downsizing. I think we need to wind down Fannie Mae and Freddie Mac. We can do that right now. The Federal Housing Finance Agency can put them in what's called receivership. They're in conservatorship now, but they could put them in receivership and start doing that immediately.
But isn't the problem, Vern, if they put them in receivership, that it'll force a debt restructuring that would basically really seize up the big banks?
I don't see that happening. I mean, this is...
Can I explain to you how it could happen? Because right now the big banks are pretending that the second equity lines and the second liens are all worth 80 or 90 cents on the dollar. As soon as you start to restructure the first mortgage in your receivership at Fannie, Freddie in the open market, you immediately render the second liens at the big banks worth zero, which completely annihilates the balance sheet of the big banks. It's the same as if I have an idea to put swaps on exchanges, and I love all these ideas, Sam, but whether it's restructuring at Fannie or whether it's restructuring the first lien in the bond market and the mortgage market, or whether it's my thing with the swaps market, the very reason none of these ideas ever happen is because if you were to do them, it would force a complete restructuring of Wells Fargo, Citi, JP Morgan, and Bank of America, because their entire business is based on the value of the second equity loans, the home equity loans, all of which in the context of a debt restructuring are worthless. That seems to be really the political obstacle to dealing with any of this.
Right. Well, I wanted to ask the guest, I mean, it wasn't, when you talk about it being the fault of regulators, I mean, didn't we have a crisis time in 2008 where really we had a problem that was systemic as opposed to any decisions that were going to be made by any individual regulators? Because at that point, the crisis was, if we don't act upon this within weeks, it's all going to hell in a handbasket. Now, I don't necessarily accept that analysis at the time, but don't we need more of a systemic long-term fix than one of just regulators who had a better sense of what was actually going on?
Well, first, briefly, to talk about the Fannie-Freddie situation and the wind down. I mean, we keep putting off and putting off and putting off the day of reckoning, and we have to bring the mortgage market back in balance. And the only way to do that is to start to wind Fannie and Freddie especially down. They're 80–90% of the market. As far as you mentioned, the regulators, they're supposed to be the early warning system for the financial system, and they completely broke down in that role. back in 2008. They completely missed the ball on the macro level. They didn't realize the problems would spill over from the subprime market into the general economy. And they also did it at the micro level. They missed completely the individual institutions, whether it was Bear Stearns or Wachovia or Citigroup or Bank of America. So they completely dropped the ball on that. The problem with the Dodd-Frank reform is there's this FSOC, the Financial Stability Oversight Council, and it's going through the same thing. If you look at MF Global, which was the last institution that had some problems, they filed bankruptcy on October 31st, and our early warning system of FSOC, they looked at that at their board meeting on October 31. So they're not acting even in this role envisioned in Dodd-Frank to be an early warning system.
They have this fantasy if they make a bunch of rules and have a bunch of meetings, they can fix it, as opposed to restoring capital requirements, writing down the debt, and moving on with our lives, which a version of which is Fannie and Freddie. Go ahead, Imogen.
I'm just wondering, in writing your book, how difficult was it to get hold of the figures, the true financial information of all these bailouts?
Well, there's what's called the Freedom of Information Act, which is very nice sounding. You'd think that you could just walk into the agencies and get what you wanted, but it's not that easy. They have exemptions, which are essentially big enough to drive a truck through, in the sense that they label something deliberative process, and the agency puts that label on something and they can immediately exempt it from any release. So I was struggling with that. I got a lot of help from Judicial Watch, which they were my attorney. They're a legal advocacy group here in D.C. And eventually we did get a number of the documents, and it's interesting to compare the before and the after. The before was either we didn't get anything or we got heavily redacted documents, and I have in the book a back-to-back of an after picture, which is the document when it was fully released, and it's just pitiful how poor a case they were trying to make to support these bailouts of the financial institutions, especially the FDIC and the Fed, which I've fought the hardest over the last
great work,
2-3
Vern.
years.
I could not agree more. I could not more wholeheartedly support what you're attempting to do. It's something you surely know that we've been attempting to do ourselves, and looking for many others to push this. And the point of the Dodd-Frank putting the Federal Reserve in control as some sort of magical mystery tour master, as a way for them to basically run the banking system without ever having to do a vote again, which is the only point of Dodd-Frank, while not dealing with the too big to fail issue or the lack of capital requirements, I think is a stunning evidence of the failure, and wonderful journalism on your part. Keep beating the drum and beat it loud and beat it hard.